All right, I think we'll start, team. So hopefully you can all see my screen I've shared there.
Yep.
Yep. I won't mute it at the moment, but if we get background music, I'll mute it. But if anyone wants to ask questions as we're going through, feel free to unmute yourself and ask the question, because I think we can sort of cover the questions as we're going rather than waiting till the end. All right. So hopefully some of you we've been through Job Keeper already. We've all got to the end of the current one. What I was going to do is just briefly look at the extensions. The first, they've given us 2 extensions. The first one is, they've called it Job Keeper version 2, Job Keeper version 3, but we've got extension 1 and 2. So the first one's starting at the 28th of September and going through to the 3rd of January. And the second one's from the 4th of January through to the 28th of March. Really just giving people extended with some reduced amounts, and I'll talk about the amounts as we go through a bit further. So to be eligible, it's essentially very much the same as previously. You needed to have your 30% downturn, or if you're a bigger business, 50% downturn. The big change is actually the comparison to see what are you comparing against. In the previous JobKeeper 1, you only had to do it for 1 month out of the 6 months to prove that you were down by 30%. For the next 2, they're looking at your actual GST turnovers for this year. So to be able to be eligible for this version 2, you need to be looking at your September quarter for 2020 versus 2019 and be 30% down. So one of the key things there is that it's really important that you get your BAS in for the September quarter, or at least work out your BAS numbers so you can compare. Because if you are paying people for JobKeeper, a lot of people are going to need to be starting to be paid this week and next week. So you need to actually have made that decision. Are you actually eligible to claim it before you start paying it out? The second JobKeeper, or for next year, is going to look at your BAS for the December quarter. So comparing this year's BAS to last year's BAS. If you've not dropped below 30% on those, the tax office has given some alternative tests that you can compare. I wasn't going to go into those today, but if anyone wants to ring, you can give us a buzz and we'll talk to you about them. All right, so the basic turnover test is not much different. I've really just listed out what are the normal things that are going to go in your BAS return. So it's your GSTs. So you're really looking at your G1 figure to see how much has your turnover been compared to last year. Given that most of us are in WA, I expect there won't be that many people who will be claiming it, because most people are doing okay at the moment. So I have listed out in there, and I'm not going to go through in detail all of those, but it's just really saying you need to be just looking at the BAS and doing a comparison. If you've then got any questions, yes, there are a few exceptions that you can deduct out and take away from things. All right, so maybe the first thing is really going, if the business is eligible, you need to do the comparison of this quarter to last year's quarter, just to see if you are eligible. If you're not eligible, you just need to complete your September declaration and then do nothing, because you will automatically drop off receiving your JobKeeper. Just had one client today come through where they'd gone through all of their employees and put them as JobKeeper finish, and they missed out then the last declaration, so they've had to actually make changes to their payroll to take away the JobKeeper finish. So the real thing there is if you're not going to be eligible, you essentially do nothing. Just finish off your final declaration so you can get your final piece of money. If you are eligible, to keep listing, we'll start talking about it in a bit more detail for you. All right. So the first,
ask a question on that.
Yep.
So we don't have to officially advise the ATO, for example, using MyOp, that your various employees have ceased to, all your employees have ceased to receive JobKeeper. You don't go through any other process. You just
No, you do nothing, because the default is that you aren't actually going to be getting JobKeeper. As we go through, you'll see that for anyone who's moving into the next phase, you have to nominate the employees on a tier 1 or tier 2 level, which is telling the tax office you're continuing. So their default is no, do nothing, and they won't send you any more money.
Okay, so
but you do need to finish off your September declaration to claim the September amount.
Okay, so if you drop off for the, if you don't qualify for the December quarter based on your turnover for the September quarter, but you will re-qualify for the December quarter into the March quarter, you just click back on again and declare your turnover, and it all happens?
Correct. You will need, as we go through, you'll see about the tier 1 and tier 2. You'll need to then nominate the people that are coming in and when that is, and they'll pick up and work from there onwards.
Okay. Great, thank you.
All right, so having a look at the extensions we've got there for the first one, they've worked out that you've got to work out who are your part-time employees and who are your full-time employees. And essentially the rule is if someone's worked for more than 80 hours across 4 weeks, they are qualified as being in the full-time category. If they're under 80 hours across 4 weeks, they're in the part-time. And you're really getting the 1,200 or the 750. And then as we move into next year, it drops back down from 1,200 to 1,000 and 750 to 650. But the criteria of whether you're working is still at 80 hours across 4 weeks. So working out how to work out that 80 hours is looking back at your 28 days before the 1st of March or before the 1st of July, depending on which one you want to use. It's going through and working out the normal hours they've worked, any paid leave or overtime hours, and the 80-hour threshold is across the 4 weeks. So any of those 2 periods, as long as the person is above that, they can then get to the 1,200 level. One of the important things is you need to save your calculations for when, and I say when you get the audit. I expect there's going to be a fair few audits coming through over time. So the important thing is with both the calculation of the tiers and also your calculation of your eligibility, make sure you keep a record of it and put it in the file. So in case someone comes along in 18 months or 2 years to go, yes, why did you claim for this person, or we didn't think you're eligible, you need to have got those records and have them saved away. There's a few things there, and we've just made that if you've done the normal calculations and someone who you think should be eligible isn't eligible, there are some other alternative tests that can be used. So if you need to, come back to us and we'll talk to you a bit more about those. But the key thing is really looking at that month before, sort of looking at February or looking at June and working out how many hours people should have or would normally have worked. So it's really is looking at the 20 hours a week minimum. A couple of things there. If someone is paid monthly, they've said they've really gone, the hours should be a little bit higher to meet their criteria of what is a monthly cycle rather than a 4 weekly cycle. But I think for most people, if you're a full-timer, it's pretty easy to say who's full-timer. It's really the casuals to work out whether their hours are above or below the 80 hours a month. If you're the business owner, the same rules apply to you. Have you worked more than 80 hours in the month, right? Or back in February or in June. So you apply exactly the same for a business owner as if you were the staff member. The key changes that we've got that's coming through in this thing is we need to be able to tell the tax office who's in the tier 1 and who's in tier 2. So who's going to get 1,200 and who's going to get 750. And you'll see there I've highlighted in yellow in the PowerPoint, there's a thing called JK Tier 1 and JK Tier 2. So So this is what the tax office want us to be putting on our payrolls so they know how much to pay. While I'm thinking of it, I'll get Kate to also send out the PowerPoint to everyone who's registered and on board today, so you can actually look at it in case you want to check anything. So one of the key things with this, the tier 1 and tier 2, they've used the same methodology they've used when we first set up JobKeeper, with JobKeeper start dates and JobKeeper finish dates. So it's essentially an allowance that we need to set up in the system. So the good thing is, if you've already been doing JobKeeper, this is really just allowing you to go back and repeat what you've done with just different descriptions. So setting up the allowances, they're pretty easy. Depending on your payroll systems, you either set them up as a 0 or a 0.01 cent, depending on the software or the payroll you're using. You still need to go through and do your monthly declaration. So when you get into the beginning of November, you'll be doing the declaration for October, and it'll be telling you how many you've got in tier 1 and how many in tier 2. The fortnight numbers that we've been talking about through the whole thing continues on as it was. So you still have the situation, if staff leave in this period, you'll still need to do the JobKeeper finish and the fortnight number. So you're basically getting those flowing through. And they've given us an extension up to the 31st of October, so we can do the top ups for period 14 and 15, mainly because for lots of people, if you haven't done your BAS calculations yet, you don't know whether you're going to be eligible or not. So I think getting that BAS calculation done this quarter is really important to actually be able to make the decision, because then once you know whether you're going to top people up or not, then you can move forward. All right, so I've just put in here an indication of where the periods start and finish. And you can see there, we sort of put in the tier 1 and tier 2 with the amounts, just so that people can see when things change over and what periods they are. All right, it's the same thing we've got here with our setup is, where I get excited, is when we're setting up these JobKeeper tier 1s and tiers 2, it is really essential that we get the descriptions right, because this is what the tax office is going to take off our STP uploads to know how much to pay us. And the good thing is, because we've all done JobKeeper before with the setup, it's really just replicating what we've done before. So what I was just going to do, I've taken some snapshots of the different accounting systems, so we can just briefly run through, and depending on the different accounting systems you're running, you can take note of it. I've cheated a little bit in creating my slides. Instead of creating them and doing them with the JQ tier 1, I've just picked up the previous ones with the start and stops, because the actual setup structure is the same. The only thing, and this is in attaché, you just need to go in and look up your start allowance and then change your start allowance to JK tier 1 and put the job description in as tier 1. Do another one as JK tier 2 and put it in as JK tier 2. Once you've done that, you then just need to add that tier 1 or tier 2 into the first pay that you're doing for the October, because that nominates where the person is going to be running for the next period. So quite easy. It's really exactly the same as we did with the start on the previous time around. Does that make sense to everyone?
Yeah.
No.
Yeah, I kind of came in a bit late, but are you sending out notes?
Yes, we'll send out the notes. But the key thing from an attaché point of view is it's really, and with all of the systems, it's just replicating what we've already done with the start thing. We're just using tier 1 and tier 2 to nominate the difference.
Is tier 1 the 1,200 a fortnight?
Yes, the tier 1 is the 1,200.
Ta.
All right. So in Wage Easy, same thing, just going into your setup allowances, add etc. Add the description in JK tier 1 or 2. Add it in. With Wage Easy, you need to put in 1 cent in the amount column. Don't tick the super. And I've just snapshots of what the screen would look like, just bearing in mind that the description is not saying start 1 now, it's actually going to be saying JK Tier 1, Tier 2. That's pretty easy. One of the interesting ones we've had is with MyOb, we've had two different conflicting pieces of information about how we set this up. One where we're basically doing it with exactly the same with JK Tier 1 and Tier 2, and it really replicates what the others have done. And then on some of the, if you're actually doing it off the cloud, there is actually a special area that MyOb has set up for JobKeeper payments. So in here, you've actually got a new area that's just been created, Tier 1 and Tier 2. So you can just go through your different staff members and tick which one they're in. And Xero have taken the same approach. They've basically gone in and created a JobKeeper extension. And you'll get this pop up in the system when you actually go to Xero saying changes to JobKeeper scheme. So you just need to click on and go into this payroll support page and then go to the enrolment settings. And once you're in there, for each different employee, you just tick up Start JobKeeper and flag, are they Tier 1 or Tier 2? If anyone's running Employment Hero or KeyPay, their instructions were a bit conflicting to what we'd seen with other people. They are actually having instructions to put in JCART or JobKeeper, the full word /Tier 1 and JobKeeper /Tier 2, which is different to what all the other pieces of software have been saying. So that just, if you are doing that, just bear that in mind or give us a ring and we'll talk you through it. All right, so just really running through this fairly quickly as a summary. First question, are you eligible? By dropping the 30%. If you are, if you're not, there's nothing really to do. You just got to claim it and you'll stop automatically. If you are eligible, you need to then start working out who is going to be on Tier 1 and Tier 2. You then need to set up in your payroll system the allowances for JK Tier 1 and Tier 2. And when you do that, then you need to just go onto their pay slip to put in whether they're actually who they are so they know when to start. You then have your consistently thing, your monthly declaration to do it. The fortnights haven't changed. All the existing top-up codes are the same. So if you are actually having to top people up to the 1200 or the 750, you do the exact same calculation you've been doing previously and using the same JobKeeper top-up codes. And we have until the end of October to catch up all of this month's people if we're holding off for that BAS reporting. All right. The other thing I've just flagged in here, the ATO is watching, which is really about making sure with all of these calculations you do, make sure you actually record them and save them, because they are going to be coming to audit us. There's no way they're letting us all off the hook and just giving us money for nothing without checking it. So please just make sure you get all those records saved somewhere. Okay. One last thing which is not covered under most of the JobKeeper things is if you're not eligible and you're a legacy employer, all of the Fair Work Act rules and things revert back to being normal. So the flexibility that was given to us during COVID disappears. So you can't stand people down and all of those rules sort of revert back to standard unless you've had a 10% downturn for the quarter. If you have had a 10% downturn for the quarter, you need a certificate from your accountant to actually say that you're actually down by 10%. If you've got less than 15 staff, you can self-certify this, and it allows you to have flexible hours with people down to 60% of their normal base hours up till the 1st of March, or sorry, based on the 1st of March ordinary hours they had this year. You can still stand people down and have their flexible hours down to 60% of their normal base. So while you're getting yourself, even though you may not have been able to claim JobKeeper this time, you've still got a little bit of flexibility in how you can deal with staff and not going back to the full Fair Work Act. I think that one there's been slipping through for a lot of people, that assuming that we're going back to absolutely the normal. So if you do have a look and just check your turnover, and if you need to get that, you might want to talk to your accountant about getting it, or just looking at to self-certify and get your records in place so that if anything comes back. It's been interesting. Danny in the HR areas been in front of the Fair Work Ombudsman and people far more in the last 3 or 4 months than we've done previously. But if you do get into any sort of issues with people and things like that, feel free to ring us or ring and talk to Danny, and he can help you out with that sort of stuff. All right. Any questions at that stage?
Nope.
Nope.
I have one, Colin. It's Shane here.
Hello, Shane.
So just to clarify, so with the tier 1 and tier 2, so I understand if we're not going on to JobKeeper, the next stage, we don't have to do anything. It automatically cuts off.
Correct.
But if we are going on to the next level, to the tier 1, when we put in the JK tier 1 on the pay slip,
Yep.
do we have to say like fortnight 14?
No, just
It's just the one, and okay, yep.
Put a cent in.
Yeah, the assumption is that you're just moving on from there, from where you were previously. You're just carrying over, so that you don't need to start again or anything like that.
Yeah, we just need to put the JK tier 1.
Correct.
If we're continuing on. Yep.
Yep.
Okay, that's good. Beautiful.
And if any staff are leaving, then you need to have the JobKeeper finished, and you nominate the period that they're finishing.
Yeah. No problem. No, that's good. Thanks, Colin.
All right. I'll give you. I'm just going to give you all the sales spiel now, just so you know who we are, because there's a few people who haven't come via us before. Quick thing, from the point of view of most corporate businesses tend to have management, finance, payroll, IT, marketing, HR departments. Most of us in SME have the everything department being the boss, or the boss and their assistant. This is where CA management come in. We try and help you get over that gap by having those different departments. So really with this JobKeeper stuff, that's where Danny's been really handy with the HR things for people and doing the payrolls and things like that. That's where we've been trying to help people get all that over the top of it. And we cover all those other departments as well. That's enough for today. I think most of you had all that before.
A few times.
All right, so there's all our contact details. So feel free to give us a yell, right? We will basically take any questions and queries, and I will get Kate on the mission of sending you out a copy of the PowerPoint.
Okay, that's good. Thanks, Colin.
No worries. Catch you later then.
Thanks,
Okay.
Colin.
Bye.
Bye.
Thanks, Colin.
Okay, bye.
Ta.
Thank you. Bye.
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 Bye. Dropping off slowly.